The derivatives market is showing something I haven't seen since the beginning of the last major bull run. And that's not even the most bullish signal I'm about to show you. Stay with me because in the next 10 minutes, I'm going to break down exactly why Kaspa might be gearing up for a move that could catch 99% of retail investors completely off guard. This is not financial advice, but what I'm seeing in the data right now has me more excited about KAS than I've been in months. Since late June, and I want you to remember this date, Kaspa has been building one of the most beautiful ascending trend lines I've seen in the altcoin space. We're talking about a clean series of higher lows, backed by consistent buying pressure every single time the price touches that trend line support. But here's where it gets really interesting. While most traders are focused on price action, the smart money indicators are flashing signals that most people are completely missing. Let me show you something that's got me absolutely fired up. Kaspa's funding rates have stayed positive since late June. For those of you who don't know what this means, funding rates basically show you whether traders are paying to go long or short on an asset. When funding rates are consistently positive like this, it means traders are literally paying a premium to bet on higher prices. This isn't just a one-day phenomenon. We're talking about months of sustained bullish sentiment in the derivatives market. In crypto, when funding rates stay positive for this long while price consolidates, it's like watching a spring get compressed tighter and tighter. Eventually, something's got to give, but wait, it gets even better. According to the latest data from Kaspa Daily, known exchange holdings have just dropped to a new 6-month low. We're talking about just 2.19 billion KS sitting on exchanges right now. Think about what this means. Less supply available for selling, more coins being moved to cold storage and wallets. This is classic accumulation behavior, and it's happening while most retail investors are still sleeping on this opportunity. And here's the fundamental catalyst that could be the spark that lights this whole thing off. Kasplex is almost ready for mainnet. Now, if you've been following the Kaspa ecosystem, you know that Kasplex represents a massive step forward for the network's capabilities. The timing here is absolutely perfect. Technical analysis aligning with fundamental developments, that's the kind of confluence that creates life-changing moves in crypto. Now, here's where things get really interesting and honestly a little nerve-wracking if you're holding KS right now. Let me walk you through exactly what the chart is telling us right now. On the 4-hour time frame, Kaspa is showing multiple break of structure points. These are basically footprints that show buyers stepping in at key moments. After hitting a peak at $0.122 back in mid-July, we saw a healthy pullback that tested the ascending trend line perfectly. The current price structure is absolutely textbook bullish. We've got that ascending trend line from late June acting as dynamic support, the 30-period EMA pointing upward and holding at $0.093, and most importantly, we're seeing higher lows consistently being formed. But here's what's got me on the edge of my seat. The RSI is sitting at 52.25, perfectly neutral. The ADX is showing 26.05, which means trend strength is building but hasn't reached overbought levels yet. The MACD is balanced right at 0. Do you know what this tells me? We're sitting in the calm before the storm. The indicators aren't screaming overbought, which means there's plenty of room to run if we get that breakout. Now here's something that's been puzzling me. Volume has been steady, but we haven't seen any major surges yet. In crypto, volume often precedes price. So this steady accumulation volume, while price consolidates near resistance, it's like watching water behind a dam that's about to burst. Right now, KS is locked in a tight trading range between $0.093 and $0.098. This is what we call a consolidation pattern, and historically, the longer these patterns take to resolve, the more explosive the eventual breakout tends to be. The key levels I'm watching are crystal clear. Resistance, $0.098, 10 cents. This is the make or break zone. Support is at $0.085, $0.087, the ascending trend line, and the critical support is at 8 cents, June lows. Here's what most people don't understand. This isn't just about a few percentage points up or down. If Kaspa breaks above 10 cents with conviction, we could see a rapid move to $0.105, 11 cents. And if momentum really kicks in, we might even test those mid-July highs around 12 cents. But if we fail here, if sellers step in and push us below that ascending trend line at $0.087, we could be looking at a drop to $0.084, $0.085, maybe even down to that critical 8 cent support level. The risk-to-reward ratio here is absolutely fascinating. We're talking about potentially massive upside if the breakout happens versus clearly defined downside levels where you know your risk. Remember those positive funding rates I mentioned earlier? Here's why they matter so much right now. With leverage tilted toward buyers while price consolidates near resistance, we've got a setup that could fuel a seriously sharp move once this range finally breaks. When you have sustained positive funding rates like this, it means there's a lot of leverage long positions building up. If we get that breakout above 10 cents, these positions could create a cascade of buying that pushes price much higher, much faster than most people expect. But it's also a double-edged sword. If we break down instead, some of those leveraged longs could get squeezed out, creating additional selling pressure. Alright, now let me show you exactly what the data is telling us about where Kaspa is headed next. Because what I'm seeing in these numbers is absolutely fascinating. If Kaspa closes strongly above 10 cents, we're looking at what I believe could be the beginning of a significant leg up. Here's why I'm so confident about this scenario. First, that exchange supply squeeze I mentioned earlier. With only 2.19 billion KAS on exchanges, a 6-month low, any significant buying pressure is going to have an outsized impact on price. It's basic supply and demand economics. Second, the funding rate staying positive for months while price consolidates is textbook accumulation behavior. When this pattern finally resolves to the upside, the moves tend to be swift and substantial. If we break 10 cents, these are my initial targets. First target, $0.105, 11 cents, that's a quick 12 to 18% move. If volume increases, $0.112, 12 cents, potentially 25 to 30% upside. And the stretch target is retest of July highs at $0.122. The beautiful thing about this scenario is that it aligns perfectly with the Kasplex mainnet launch timeline. Fundamental catalysts combined with technical breakouts, that's how you get those explosive altcoin moves that everyone talks about for months afterward. Now, there's also a chance that 10 cents continues to act as resistance, and we see an extended consolidation pattern. This wouldn't necessarily be bearish. Sometimes the market just needs more time to build energy for the eventual breakout. In this scenario, we'd probably see KS trading sideways between $0.085 and 10 cents for several more weeks. This kind of range-bound action usually means institutional players and smart money are still accumulating, waiting for the right catalyst to push the market in their favor. The key thing to watch here would be volume patterns and those funding rates. As long as funding stays positive and exchange supply keeps declining, this range-bound action would just be building more pressure for an eventual explosive move. I'll be honest with you, there's always a chance that we're wrong about the direction. If Kaspa breaks below $0.087 with volume, it could trigger a move down to $0.084, $0.085, and potentially even test that 8-cent support level from June. But here's why I think this is the least likely scenario. The fundamental picture is just too strong. That exchange supply decline, the positive funding rates, the Kasplex mainnet preparation, these aren't technical indicators that can be manipulated. They represent real supply and demand dynamics. If we did see this kind of breakdown, I'd actually view it as a massive buying opportunity because the underlying fundamentals haven't changed. The risk management play. No matter which scenario plays out, the risk management here is crystal clear. If you're considering a position in KAS, entry zone, current levels around $0.093, $0.095, stop loss, below $0.087, the ascending trend line, first target, $0.105, 11 cents risk-to-reward ratio, approximately 1:3. That's the kind of risk-to-reward ratio that professional traders live for, the institutional money flow. Here's something most retail investors don't pay attention to, but it's crucial for understanding where we're headed. The fact that exchange balances are hitting 6-month lows while price consolidates near resistance tells me that institutional players and smart money are accumulating. Retail investors typically buy when price is pumping and sell when it's dumping. Institutions do the opposite. They accumulate during consolidation and distribute during euphoria. The convergence of technical and fundamental factors here is remarkable. It's the kind of setup that doesn't come around very often in crypto. You've got clear technical levels, fundamental catalysts, and market structure that all point in the same direction. The risk is well defined, the reward potential is substantial, and the timeline is compressed enough that we won't be waiting months to see how this plays out. Whether you're already holding KS or just learning about Kaspa for the first time, this is definitely a situation worth watching closely. The next few weeks could be absolutely crucial for the future direction of this asset. Don't forget to smash that like button if you found this analysis helpful, subscribe for more deep dive crypto content, and hit the notification bell so you don't miss any updates as this situation develops. What do you think? Are you bullish on Kaspa's chances of breaking that 10 cents resistance? Let me know in the comments below. I read every single one and love hearing your perspectives. Until next time, stay safe out there, and remember, in crypto, patience and proper risk management always win in the long run. Disclaimer: this content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly volatile and speculative. You should never invest more than you can afford to lose. Always do your own research and consider consulting with a qualified financial advisor before making any investment decisions. Past performance does not guarantee future results.